Dennis Vieira here. I'm a loan officer. I operate out of New Jersey and Pennsylvania. And what I'm discussing today is the difference between pre-approval and pre-qualification. So just to start, the terms are used interchangeably, which is very confusing because they're really not the same thing. Whether that's by design or ignorance, I'm not sure, but pre-approval and pre-qualification are very different ends of a similar process. So what I mean by that is pre-qualification is going to be way less formal, way less concrete than a pre-approval. A pre-qualification is commonly going to look like you hop on the phone with someone at the bank or whoever that is. They're going to ask you some questions, no documentation requested, no credit pull. It's going to be something along the lines of like, hey, how much you make? What's your credit score? How much money you got in the bank? Here's a letter, go shop for homes. Good luck. Now, the issue with that is your perception of what you earn each year or what's on your tax returns or your W-2s is not going to be common sense when it comes to how the bank looks at it, how they're going to calculate it or perceive your actual earnings and what they're going to include on a mortgage application. This is especially true when you're dealing with self-employed borrowers, people that have overtime, bonus, commission, any type of variable pay, hours with like differential shifts, stuff like that. So pre-qualification doesn't touch upon nearly any of that stuff, especially not things like your debt to income ratio. You're not going to know truly what your credit score is. There's a number of factors that are going to be kind of you're in the dark on until later on when you actually get this stuff reviewed. Now, what you might have done in the meantime is look at a bunch of houses, spend a bunch of time and money based on this pre-qualification, hoping that it's valid, that you could have some confidence that you actually qualified for what they're telling you. Now, pre-approval takes this a step further. Of course, we're still going to have the same initial conversation. We're going to be asking you questions about your income, your work history, credit score, stuff like that. But the additional step that's missing from a pre-qualification is we're going to correlate all this with your documentation, things like pay stubs, tax returns, an actual credit pull to give you a true debt to income analysis. Things like that are going to give you some peace of mind and confidence to, hey, when I'm looking at houses, I'm really feeling good about the work that's been done to verify that I can get the loan I need to buy it. Pre-qualification is barely touching the surface when it comes to that stuff. So I hope this helps explain the difference between pre-approval and pre-qualification. Please reach out if you have any questions, and happy house hunting.